alternative source of information. The second associated impact is very important. These fintech companies, firms, have not only disrupted the BFSI, they are also impacting non-BFSI sector companies or industries. And those companies, which may be a typical manufacturing company or a marketing company, not a finance company, they are also learning the key takeaways of fintech. For example, I was talking to one audio company, sound company. They come up with, a sound system like Bose. And this company was planning to launch a new audio system, a Bluetooth-enabled mobile system. They were trying to find out, A, what should be the feature, the specs of that audio system. B, what should be the price point? At what price they should offer this product? And the way they went about it, instead of doing a survey and engaging a market research firm to identify, who are the possible customer, what features they want, what is not currently available, and hence what is the price they're going to pay. That is a traditional route, survey method, research through the market research firms. They have not followed that route. What they have done, they have crowdsourced this information. How? So they looked at competitors. I will not name those companies. They looked at two of their competitors who already had products in that space and tracked the tweeters. What the customers are saying about those two products. What is good about it? What is bad about it? What is missing in those products? And based on that, they created a product specs where certain features were common with the other products, but certain features were new, which the tweet said the customer was looking at, but they didn't get it. And similarly, they also looked at tweets to find out the price point. That means for the additional feature, how much price customer would be willing to pay. So to cut the long story short, the point I'm trying to make is the usefulness of big data is now being appreciated, not only by companies in the BFSI space, but also companies or firms beyond this space. So at a high level, this is the contribution of, fintech overall. But when you talk about fintech, it is not just one business. Fintech is an umbrella of several businesses. So if we see, the slide I'm showing here is not an exhaustive, it is inclusive, but this is a nice way of presenting what all things happen within the fintech umbrella. So here I have mentioned 5 things, and this I've taken from, I think, KPMG's report. In India and many other emerging and less developed countries, the first influence of fintech or contribution of fintech or usage of fintech, use case, was in financial inclusion. So fintech played a major role in financial inclusion. And today when Arif talks about it, he will refer to how Npci and others have actually helped in this financial inclusion. And it is, as I mentioned, across the globe. For example, I have given one example here from a Vietnam company called Doreming. In Vietnam, many people who work in the unorganized sector, they don't have bank account. In India, we have the Jan Dhan, but prior to Jan Dhan also, we didn't have many people didn't have bank accounts. So similarly, the situation in Vietnam. So people who work in unorganized sector, they were paid their salary in cash. And it led to a lot of problems. One is if you pay in cash, then people consume it faster. So maybe 15 days in the month, they're out of cash. And secondly, thefts and other things happen. So here comes this company called Doreming, and they said, look, you don't need a bank account. So we'll create an account in your name, like a mobile-based. It's like a wallet. The employer in the unorganized sector can transfer the money to your wallet, your salary, and you can use that money, that wallet to pay for anything. So without a bank account, you can receive your salary and spend. So in that sense, they have included those people who are outside the banking system in some form of financial ecosystem. And there are n number of examples. For want of time, I'm not going there. That's one, financial inclusion, big time, major. Second is enhancing customer experience. Now, customer experience can be enhanced in two ways. One is through transparency. So, nowadays you have fintech companies in the insurance space. Like in India, we have policybazaar.com. You go to their site, Policy Bazaar, you have all the policies, life, non-life, their premium amount, their coverage, etc. And I can decide which one I want to pick. So I don't depend on a broker or a financial advisor to tell me which insurance policy I should pick. I can look at the list and I can select one. So that is one kind of experience. Bring more transparency. More than that, another customer experience enhancing tool is provide whatever customer need in a single platform, such that the customer need not go to various platforms or firms to fulfill their requirements. And here is an example. There's a company called iZettle, which offers a unique solution, I will say a 360-degree solution to the SMEs. So in their platform, they have a ERP system, they have a payment system, they can even manage day-to-day work, send emails, and most importantly, they have a funding subsection where you can list yourself, you can say, I need this much money for this project. And there are funders who are also onboarded to their platform, so they can create a matchmaking. So for the SME, running the day-to-day operations, making payment to the vendor were always done. But they have gone one step ahead and looked at the pain points of the SMEs because, it's very difficult for SMEs to get traditional fund from banks. So they create an alternative source of funding for them. So therefore, it's a 360-degree kind of solution so that the SMEs go to a single platform and get everything. Third is transparency. Now, I talked about one type of transparency, which is the Policy Bazaar example. But here you go beyond this. And there are many wealth management platforms which does this, and insurance platform, insurtech platforms, where you give them recommendations, which means not only you list the financial instruments which are available, you look at what the user does or try to capture the risk profile or risk appetite of the user and suggest financial instruments, suggest investment plans for them. You can even tell the user, not only by sending alarm like, your insurance premium is due within the next fortnight, that's simple. You can even go beyond that and say that given your habits and your lifestyle, you should go for this kind of insurance policy. So therefore, you go beyond listing what is available, you become an advisor. That also enhances transparency. And here, the information that you track is all alternative source. You can track information about the user from some IoT device, or you can track information from how much money that fellow is spending on food, how many times in a month that person is eating outside, and what is the ticket size bill, which shows that the person not only has money, but is profligate, and if you eat too much outside, it might have a problem on your health. You need to take care of your health, etc., etc. So that's what they do. And there's a company called Brawley in UK. They exactly does this. It's an interactive platform. Okay. Next, as you have technology coming into your life and providing you solutions, comfort, transparency, experience, better experience, there is a flip side to it also, which is it is creating a lot of cyber security risk, cyber threats, cyber crimes. And hence, you need security and compliance. So there are fintech companies which specialize in security, cyber security, and they also specialize in compliance. So I'll first talk about security and then compliance. So one traditional use case for cyber security is the credit card fraud. Try to block the card, that happens, that goes on. And there are many companies which does this service, but you need to go beyond this credit card. There are today transactions happening without credit cards for UPI and other system. So you need to have a solid, robust security mechanism to ensure that the threat of cybersecurity is low. And this digital currency, when people talk about moving from paper currency to digital currency, in terms of ease of use, it is a good development, but the threat of cybersecurity is also high. And finally, provide support and guidance. There's a huge space which is not yet fully crowded. Unlike inclusion, insurance, customer experience, a lot of players, payments, digital lending, a lot of players. But providing support and guidance through analytics is a space which is gaining traction. So they provide you a lot of guidance, and you can use their services to make your economic decisions. For example, if I want to trade on stock market, one is I can look at the recommendation of stock X or stock Y, that's one type, and then go to a platform to trade. Like in India, we have a platform called Zerodha where you can trade. Retail investors are trading. Upstock, Zerodha, a lot of platforms have come in. But there, I use those platforms essentially for trading. But before trading, I need to know which is the best stock to buy. So there are some platforms which are giving you recommendation based on high level of analytics, AI, machine learning kind of tools they use. And providing support guidance also includes wealth management tips. And these wealth management tips are not the traditional ones that you and I get on the mobile SMS. This goes much beyond and provide you tips based on at high frequency level, what action is going on. So they actually crunch and use a lot of high frequency data to give you signals. These trade signals can be based on purely price, meaning past price, volume, etc. This trade signal can also be based on news. So if there's a flash news about a company, suppose it comes during the trading hours, you get a signal from them, you get an alert, news alert, saying that, there's a good news has come right now, buy that stock or sell that stock if there's a bad news. So those kind of signals are also available, and a lot of hedge funds use those tools. Okay, so this is the overall spectrum of fintech. So when I say fintech, it could be any of these 5 types. Okay. Now, who are the players in this fintech ecosystem? Broadly, I divide it into 4 segments. There are startups who operate mostly in B2C, because B2C is the space where you can scale up very fast and it attracts a lot of money. Today, if you look at what is going on in India, we are, as we speak today, this is 23rd of February. We are 1 month plus 20 days. So about 50 days have passed in this year. In this 50 days, within these 50 days, there are 22 unicorns that have happened in these 50 days. So roughly about 1 unicorn every second day. And a large part of them, majority of them, 75% plus of those unicorns are from fintech space. All are tech space, but fintech space is majority. And again, within those fintech space, the guys who are really attracting a lot of money are those who are operating in the B2C space. So they are providing solutions for customers, and they are mainly looking at scalability, the volume. Their business model, their unit economics is not yet in place. They're burning cash big time, but they're growing also very fast. And funders, they are funding growth. They're not funding profitability. But this space is getting crowded. And as a result, what happened was, because a lot of money is chasing a few number of companies into this B2C space, the customer acquisition cost has gone up. And that is disturbing the unit economics. The companies are struggling to show a positive bottom line. But they are showing growth. I don't want to name company, but there's a company called Cred, which facilitates credit card payments. It was set up 2.5 years ago, 3 years ago. Already it is $4 or $5 billion valuation. Has it made any profits? No, but its volume is growing very fast. So this is one segment. A lot of startups have come here into this B2C segment. And as I mentioned, their contribution is two ways. One is efficiency, other one is new business model. Second, looking at these startups, the kind of business they're bringing in, the way they do the business, even traditional institutions have started, offering digital solutions, offering services completely online. Traditional players like NBFCs, like traditional banks. I'm doing a study where I find, and I'm using data, the borrowing data, personal loan data, which is essentially B2C segment. And I find that over 2019-20, when the fintech was in ascendancy, a lot of fintechs are coming, have set up their shops. They consumed, or they have taken away a lot of business from NBFCs. Please remember, fintechs were not a threat to banks, the traditional banks, whether private sector or public sector. So what you found in our study is that in 2019-20, the maximum market share, the sector which suffered and it went to fintech, is NBFCs. There's one observation. Second, what we found is that it has effects those who have moved in. This is very interesting. The borrowers who have moved out of NBFC and went to fintech for personal loan. I'm just looking at personal loan data, okay? No other loan. Their delinquency has gone down after they have gone to fintech. Their delinquency were higher when they are with NBFCs. They went to fintech, they became more disciplined. Fintech could recover that money. On the other hand, those who moved from fintech to NBFC, some movement happened the other side, other way also. Their delinquency has gone up under NBFC. So NBFC have found a lot of challenges. And hence, I know some NBFCs, what they're doing is they're creating a subsidiary within the bank or NBFC, within their establishment, and calling it a digital solution. So it's completely digital and trying to, again, win back the customers. So that's the traditional institutions, where you can have banks, NBFCs, insurance companies, etc. Third are infrastructure players, the platforms. These infrastructure players mainly operate in B2B space. So today, when Arif talks about Npci, is an infrastructure player, provides infrastructure for digital transactions and also provides some products. These infrastructure players try to help the participants do their transaction in a very secured environment and transact a high volume without putting much pressure onto the system, on the architecture. So the infrastructure players also have a huge role to play in the entire fintech ecosystem. I give you one example, which you may relate better than a crypto kind of example. And this example is about receivables, working capital management. You're all chartered accountants, you understand. So the pain point is that small and medium enterprise, when they supply some product to big players, big companies, the big companies kind of squeezes them and ask for a lot of credit periods, 30-day, 40-day, 60-day credit. Then what happens? The working capital problem is with these small, medium suppliers, because they have to manage the 60 days of working capital requirements. When they go to bank to finance that working capital need, because they are small players, banks don't offer them competitive rate. One, there is a delay, and secondly, they don't get it at the best possible rate. Now, to solve that problem, the pain for the small enterprises, platforms have come up with a solution called trades. Exchange, through an exchange, the receivables delivery system, trades is called. So what happens, there's a platform, and on that platform, so this is an infrastructure player. On that platform, on the one side, you have the suppliers, which are small, medium enterprise. On the other side, you have the buyer, which are big companies. Both have to register on the platform. Now, when the MSME sells something to the big company, they will up the invoice, they'll upload the invoice, and the buyer company has to accept that invoice, meaning approve the invoice. Once it is approved, that means both parties agree, yes, this is the product sold under these terms and conditions, it goes for a bid online. So then the bankers, the providers of the lenders, they participate in the bid and they try to buy that invoice by offering, discount rates. So for the MSME, instead of negotiating with one bank, they actually get to see that 5 banks are offering different discount rates, invoice discounting or bill discounting, what you know. And then I can accept the one which is most competitive. So through this, this platform, what is the income on the platform? They charge for this transaction because nothing is sitting on the balance sheet of the platform. It is between these two guys and the bank. But platform charges anywhere between 20 to 30 basis points on the entire invoice value as their fees for overheads. And the SMEs find that even after paying 20, 30 basis points, still it makes sense because they get the discounting rate at a very competitive price. And the last data I saw in that platform in terms of INR, about 60,000 crores were traded worth of invoicing. Almost $10 billion worth of invoices are being traded. So therefore, it has huge potential. So that's the infrastructure player. And finally, looking at this, buoyancy and the opportunities in the fintech space, a lot of established tech players have entered into this space. They're offering financial solutions. Google Pay, Amazon Pay, Apple Pay, they are all, tech players, tech companies, but they enter into finance and offering solutions, WhatsApp and so on. So these are the 4 market participants in the entire fintech ecosystem. Okay, let me tell you one thing. If at any point in time you want to ask a question, the best option is write on the chat or raise your hand, and then I can take you up. Okay, don't start speaking. Either raise hand or put it on the chat, I'll respond. Now, given this whole background, let me see how I'm doing on time. Time is okay. I will now focus, because some, focused discussion is important. I'll now look at some trends in banking, what is happening. And when I talk about the trend at the frontiers of banking, I'm talking about the impact of blockchain in the entire banking space. So, as you know, there is a debate with cryptocurrency. The world is divided. Some people say it's a great thing to have. Regulators should encourage cryptocurrency. They should recognize cryptocurrency as a legal asset. The other school says, mostly driven by regulators and the bankers, that no, crypto is a bad thing. It's a purely speculative asset. It has no underlying and hence should be discouraged. Now, while the debate will still continue, but there are 2 elements, 2 technological contribution of the fintech is the concept of blockchain and distributed ledger. These 2 are going to stay. And they have an immense impact, positive impact on the way future businesses will run across the BFSI space, not only banking, insurance, wealth management, trading, the capital market, etc., etc. So while Bitcoin can be debated, we are not doing that, but one must appreciate that the role of blockchain and digital ledger technology is immense and all pervasive. And if banks ignore this, if banks don't adopt blockchain in their course of business, they will fall behind. So you'll have banks, instead of trying to find faults with the fintech and trying to influence the regulator by saying, don't give them all space, put them under control. instead of doing that, they should embrace blockchain technology and work with the fintech companies to unlock the potential. Now, so I'll speak a little bit about what are the opportunities available with the bank in this entire fintech revolution. As you know, the global economy, not only fintech, the entire global economy has witnessed huge technological disruption over, say, 3 decades. Even with the onset of technology, onset of internet, initially we started with information economy. When people had access to internet, people were looking for search engines like Yahoo, like Google, like in earlier days, Microsoft Internet Explorer. Essentially, you have web browsers and search engines where I, as a user, would go and search for some information. I'll put in some word and it'll give me information. So as a user, I would only read that information. I can't edit those information in those days. Whatever they throw up, I see and read. And I say, this is what I wanted, I got it. So in web technology 1.0, as a user, I would collect information for reading and then take action. Then that was called information economy. You got a lot of information. Earlier, it was not available, a lot of information. We are all excited. But then we moved to platform economy. Now, what is the difference between information economy and platform economy? In platform economy, in addition to reading, I can read, I can also write. I can edit. For example, Wikipedia. So in Wikipedia, I can read, I can search for some information, read it. I can also edit. I can also put my own comments. So therefore, in Facebook, you can do the same thing. You can write, you can read, you can also participate. Right. So the reading plus writing was part of the platform economy. So from pure information economy, we moved to platform economy. But that also happened long back, it's a 10, 15-year-old story. And so all social media like Twitters and WhatsApp and all, these are all part of the platform economy. And platform economy helped us because a lot of e-commerce happened through the platforms. And it disrupted traditional players that time too. But now, in web version 3.0, we have now token economy, where not only we have read and write access or features, we can also execute a lot of transactions over the web. So this execution is an additional thing. So what is happening in token economy is a lot of physical assets are getting digitized. A lot of physical assets are getting digitized as tokens, and these tokens are bought and sold. Okay, so today we are in token economy. As we speak, we are in token economy, where through the web, we interact much more than what we used to do 10 years ago. Through reading the information available, writing or giving my own opinion, and also transacting. Okay, so banks, what I'm trying to say is, today we are in token economy and banks have to take advantage and find newer opportunities of doing business in this Web 3.0. So I'll now talk about 7 such products or solutions that FinTech has provided. There's one common theme across these 7 products or solutions, and the common thing is every solution uses blockchain, the blockchain technology. And banks have opportunities in every product segment. Now, here are those 7 trends. Let me first read it out, then I'll explain. Smart contracts, initial coin offerings called ICOs, asset-backed digital tokens, non-fungible tokens, CBDCs, we all know, central bank digital currencies, DeFi, decentralized finance, and Robo advisory service. And each such intervention, each such product has its usage in banking, payments, financing across financial sector. It is not that everything is usable everywhere, but what is common you can see across financial sector is smart contracts. Now, what is a smart contract? Is a digital adaptation of physical contracts. That's number one. Number two, these smart contracts use blockchain technology. What does it mean? It means that on the fly, on the real-time basis, with the consent of both the parties in a contract, its features can be changed. You can put conditions through which payments may be triggered if the condition is satisfied. You don't need any intermediary, a bank. Payments can happen. And the usage of smart contracts are many. For example, you want to distribute some welfare fund, welfare money, Government of India, they can use through, it can be through smart contracts. You want to issue some tickets, you can use smart contracts. You want to execute letter of credit, bank guarantee, those kind of documents, you can use smart contracts. So banks can actually, what today legal firms do, a lot of these legal contracts, bank can offer those services by using blockchain technology. So that's number one. Second, ICOs. Now ICOs, you all know about IPO. In IPO, what happens is you offer shares. ICOs, instead of offering shares, of course, share is in digital form. Instead of offering shares to the investor and getting cash, what you offer them is coins, digital coins like cryptos. You offer them coins, they put money. With this money, you do whatever you want to do. And the investor in the coin, ICOs, what is the underlying? Normally, when I buy shares in a company, what I get dividend from the company, and then my share price goes up and down based on company's fundamental performance, right? Similarly, in ICO, the investor in ICO will get a return like dividend type, and its value, that coin, the value can go up and down if you link it with the fundamental performance of the company. It will also go up and down. Now, I don't want to give the statistics, we don't have time, but more than $10–15 billion were raised through this ICO over the last 5 years. And how it works, the issuer company can mine those coins, mine those coins. That means they create those coins, or they may not mine that coin. They can use some other stable coins, somebody else's coins. The investor in the ICO will have all natural rights. You can give them right to vote, etc., etc. Only flip side with ICO is it doesn't come under, you don't have the regulatory protection where, if some company wants to offer an IPO, and suppose in the prospectus you have made some misstatement or you have misrepresented fact, then what the capital market regulator can do is they can cancel your IPO and ask you to refund all money to the investors. That kind of protection is not there in initial coin offerings, but initial coin offering is gaining popularity. Here again, banks can play a role. They can facilitate firms to raise money and get crypto mining companies to offer their coins. There's a space available. Third is asset-backed digital tokens. Now, one simple example of asset-backed digital token is real estate. If you want to buy a piece of land, it's a very, very difficult task today. You have to have the deed, you have to do a search that the land belongs to the person who shows the deed, and then you have to get it printed, write it. It's mostly manual, and then sign, and then the ownership gets transferred. What happened in asset-backed digital token is you tokenize the digital asset, the physical asset. The deed is tokenized. It has full blockchain technology protection so that it can be bought and sold. You don't need to wait for the registrar office to find out. And what they do in real estate token is the the area, the size of the land is geotagged. Because if there are suppose several plots of land, how do I know that I'm claiming my land has so many acres, okay, or so many square feet? They are doing geotagging to see your boundaries and putting it on the tokens. So it's much safer, much faster to trade. So here again, the banks which offer mortgage-backed loans, meaning house building loans, they can use this asset-backed digital tokens, real estate tokens. The other one is a non-fungible token. It's also a token, but there's a difference between asset-backed digital token, like real estate, and the NFTs. As the term suggests, non-fungible token meaning the underlying is non-fungible, it's unique. You cannot replace it by an identical asset. For example, if the underlying is M.F. Hussein's painting, typically what happens, if M.F. Hussein wants to sell the painting, what currently happens, you go to an auction, there are auction houses, they will auction it, and Hussein will sell the painting, get money, it's a one-time transaction, done. Instead of that, if you create a token where the underlying is Hussein's painting, it is non-fungible because suppose Hussein has painted one horse, you get painting of somebody else, a horse painting by someone else, you can't replace. So everything is like, it's a horse with the same background, you get the painting and say, okay, I'm replacing Hussein's painting with a new painting. You buy this, they're not fungible, they're different painting. So it is unique to the painter, the artist, the creative guy. That's why they are called non-fungible token. Now what happens here is, while the right on that creative asset is with the creator, the tokens can be bought and sold. You can separate out token from the underlying asset. So NFTs is an example of that. Then comes CBDC. Central bank digital currency. You know, this is a big debate going on all over the globe, including in India and across UK, Germany, US, where the central bank, US Federal Reserve in India, RBI, they are trying to launch CBDC, central bank currency, digital currency, mainly to thwart attempt by Bitcoin and other such coins, crypto coins, the private players, that they should not disturb or disrupt the money supply. They should not disrupt the banking business. Now, I'm not going to debate, there are plus minuses. In India, the government is supporting CBDC, and hopefully this year, towards the end of this year, we're going to have CBDC. Now, is it a threat to the banks, or is it something good for the bank? Now, what will happen is all the currencies will get digitized, which means I will have an account. Instead of having an account with a commercial bank, I'll have an account with the central bank, like Fed or in India, RBI. And in that account, I'll have the digital currencies, and then I'll use for payments. Now, is it a good news for the banks? There are mixed views. One school is saying it's good news for the bank because banks deposit liability side of the bank will not be affected because RBI or Fed in the US, they are not going to pay interest on those deposits, which are in digital currency. So as a customer, if I hold money in the RBI with the RBI will not pay me interest. Whereas if I put money in the bank pays me interest. So therefore, those who want to earn interest will still put money with the bank. But what about the current account money? Where there's a big daddy in banks, current account balance is about 20%, 25% of the total deposits, where banks anyway don't pay interest. That can move. And then what will happen? The central bank, instead of being a lender of the last resort, might become lender of the first resort. So the commercial banks will go to the central bank to take money for lending purposes. So it can disrupt the banking business. We really do not know. There are two schools of thought, and both sides have their own points. Decentralized finance, the sixth one. Decentralized finance, or DeFi, essentially says that you don't need any intermediary. You don't need a bank. You don't need a stock exchange for transactions. You don't need intermediaries. It can be decentralized. And therefore, you can do the transaction much faster, payments much faster. For example, in many countries, many jurisdictions, if you want to buy and sell shares, there is a settlement period. It could be T+1, it could be T+2 for some asset, T+3. So settlement takes time, 1 day, 2 days, 3 days. Under DeFi system, they said, why should it take so much time? If the asset is identified, suppose I want to buy shares of a company, if the seller is identified, and as a buyer, I have my money ready, why can't it be transferred in a jiffy? So under decentralized finance system, they're saying we'll collapse the settlement period from T+1 days to maybe T+30 minutes maximum. It can even be lowered. That's just one example, but decentralized finance is going to disrupt many such sectors. And finally, robo advisory service. Now everybody has robo advisory service. So you might wonder what is new here. Here, when you say robo advisory service, the robo advisory service is for this kind of fintech assets, which means if as a banker or insurance company, I get into the space where I give advice to my clients on in which cryptocurrency they should invest, which blockchain technology they should invest. There are platforms. Makara is one, makara.com, you can go and see. What they do is they create a basket of assets, they have a portfolio, and they ask you to invest in that portfolio. Don't invest in a particular asset. In that portfolio, what they have crypto assets of different types, Ethereum and other technology. They have blue chip companies assets, and they have other alternative assets. They have all together. And they say, you put money here, I'll give you so much return. They show you return, like 80% return in a year or sometimes 100% plus. You, as a banker or insurance company, you have clients, your borrowers or insurance companies, your policyholders. You give them this advice that in addition to traditional assets, you can invest in alternative assets, and here are the opportunities. So you can quickly take that space. So in asset and wealth management, where you're looking at alternative assets to invest, robo-advisory services is going to become huge. And there are already fintech companies into this space. So all these 7 trends show that the traditional bankers can marry their services with these new inventions. So rather than challenging fintech company and saying they are only going to disrupt us, you should partner with them, adopt them, take the best practices. That's the only way banks can survive going forward. Now, just one more thing I have, whatever time I have, 5 minutes, I'll talk about very quickly on insurance. So that is banking space, okay? In the insurance space, what is happening? Some of it I've already mentioned. A lot of disruption and changes, radical change happening in the insurance space. More so in non-life, but also in life space. First, the market is moving from non-transparent form of market to huge level of transparency for customers. I've given an example of Policy Bazaar. Today, and there is a study which shows that earlier, insurance policy sale was always supply driven. Nobody wanted to buy insurance. And the buyer, whoever ultimately buys, relies on one person, the broker or the insurance agent. Whatever they sell, you buy. But today, any user, any buyer of insurance policy will do search. And a study in the US shows that 81% of customers research online before shopping. So they will do research. Which insurance policy, which company is offering at what price, what are the coverage, and then will they invest. So transparency has improved significantly. Second, the middlemen, the policy, the insurance advisors are almost dead. So instead of have human being as financial advisor or insurance agent, you will have digital insurance agents. The Robos and online platforms, they are offering solutions. So substitution of middlemen is another thing happening in the insurance space, and that is a good news for the consumer because your cost goes down. Third, consolidation. You now have less number of players, a lot of mergers are happening in India, happening everywhere. So people are working on volume. As you merge, you consolidate, you play on volume, not on margins, which is a good news for the consumer, the policy holders, because they don't charge too much premium, they play on the volume. So you will find every country, the insurance space is getting consolidated. And as I mentioned earlier, from supply driven, it is becoming demand driven. That is one thing which has happened. And second thing which has happened so this is digital transformation in the insurance space. The second thing which has happened in insurance is introduction of new product. Like in banking, in insurance also you have a new product. For example, peer-to-peer insurance. Like you have peer-to-peer lending in the banking space, lending space, you have today peer-to-peer insurance in the insurance space. That's number one. Number two, new way of doing business. There's a company which is widely cited, very widely cited company called Lemonade. This Lemonade is doing insurance business in a completely different way. So it tells the policy holder, and most of their policy, more than 30% of the policy holders are millennials, people, they're millennials, young guys. So what they say, all policy holders who pay premium, and I'm talking about non-life, property and other insurance, they pay premium. Suppose $100 is the premium paid. Premium minus expense for the year, because the insurance company spends money overhead plus claim settlement. Suppose the expense was $60 that year. So $100 of premium income, $60 of expense, $40 surplus at the end of the year. What they do, Lemonade, is out of this $40, they keep a small percentage as equity, net worth. Rest of it, they put it in some social cause, for some social cause. So what happens is, at the beginning of the year, they do a contest. They send a questionnaire to the policyholder. Look, this year, these are the 3 social themes we want to support. One could be education, one could be water, one could be climate, whatever. These are themes. You vote. Where should we put money this time? Out of these 3, one of these 3. So based on popularity of the policyholders' demand, they choose. Suppose policyholders say this year, climate. What they do, they put this money, that 30% surplus, to companies which are in the climate change or climate renewal space. They put the money. It works in 2 ways. One, it gives a sense of entitlement and satisfaction to the policyholder that they are not just buying an insurance policy, they're supporting a cause. Secondly, because if they have higher surplus, they can support even a larger amount without paying more premium. The probability of false claim would be lower. And they found that the false claim has gone down, because people say that if I make false claim and take more money out, there will be less surplus and hence less contribution. So in a nice way, this company Lemonade has merged a social program with insurance business, and they earn the loyalty. So 2 things happen. One is customers feeling happy, they are associated with the Nobel clause, and they come back next year. So the persistence rate, what is persistency, renewal of policy, is very high for Lemonade. Okay, now I conclude because we're running out of time. I think Arif has joined or will be joining. I said everything good about fintech. Is there nothing bad, a flip side? Of course. And first, I already talked about is this threat of cyber risk, major. Suddenly somebody realizes money is gone. Mis-selling of product, major, like app-based lending platforms. And that's one threat, mis-selling, cyber threat, that's one. Second, it may cause systemic risk. to the entire sector, BFSI sector. Because if one fintech company becomes big and the other traditional players depend on this fintech for services, if for whatever reason, technology, governance, regulatory issues, this company collapses, it disrupts so many traditional players. So the systemic risk is also going up. And third, which many people don't talk about, is there is also an environmental risk globally, I'm saying, environmental hazard. Because this cryptocurrency, these are mined, somebody has to mine this currency, create and mine this currency. Now, this mining of currency is very energy inefficient. It consumes a lot of energy and space. So earlier, China was the market where most of the cryptos were mined. So they will take acres and acres of land, will have huge establishments and mine them, meaning create those currencies. There will be a large number of servers, big air conditioners, because they have to be kept in some temperature. China has banned it. Mining of cryptocurrency is banned. So what happened? All these businesses moved to Kazakhstan. In Kazakhstan, what is happening was they had surplus energy because their industrial development was not that high and they had good renewable energy and other sources of energy, even coal. They had surplus. So all these crypto mining companies moved to Kazakhstan and they started mining. And what happened, Kazakhstan, where people never faced energy shortage, because energy was in surplus, their tariff was very low. Because of the government policy of attracting crypto players, crypto miners, they came initially, economy boomed. Because energy consumption increased, they paid more money, taxes and so on. But then there was mushrooming of these miners. The energy demand has crossed the available supply. As a result, blackouts started happening in Kazakhstan where it never happened in the past. Government had to increase the tariff. There was social unrest. Citizens came out on the street, openly criticizing these crypto mining companies. And recently, Kazakhstan government had slapped, penalty and put a restriction on the miners. They're no more. But they're still facing unrest in terms of power. Tariff has gone up. They have a deficit and so on. So therefore, there are ramifications also on the negative side. So one has to have a balanced view of the contribution, but also the flip side of fintech. Okay, so with this, I will stop and question answer now.
Yeah, anyone is having any kind of question, please unmute yourself or write in a chat box. We can take a few questions before we move ahead for the next session.
Gyanesh, I think I'm on time. Time-wise, it's okay, isn't it?
Yes, it's okay, sir. Absolutely okay.
Very good.
We feel short of time actually, but it was very interactive and very nice, interesting session.
Can I ask one question?
Yeah, go
yes,
ahead.
Sir.
Gyanesh?
Yes, Raj. Yes, sir. Go ahead, sir.
This NFT, crypto, all this, to some extent we have understood. Now there is a new thing coming up, Metaverse, Web3, DApp. So how we chartered accountants should equip ourselves, like I'm learning languages, programming, coding, cryptography. So
no, I got it. See, it is impossible for Rajkumarji, it is impossible for everyone to know everything. However, as a professional, you must understand the ramification. I may not know the technology. For example, I am not a computer science guy. I may not know the code that goes behind the blockchain technology, but I must know the ramifications, the usage of it, and how it is going to affect the industry. That's important. For that, you need to go a little deeper. And we have already talked to the Kuwait chapter that we are planning a 12-hour program on this fintech so that we can go a little deeper without being too technical, but we can show you some use case and how a chartered accountant or a banker should look at those assets, those inventions. But for that, we need a little bit more time. But limited answer is you don't need to be expert of this, but you need to know its impact or ramifications in traditional sectors. Yeah, thanks. Arif is here. Okay, hi. How are you?
Prof, am I allowed
Hello,
to ask
welcome,
a question?
sir. Yes,
Hi,
yes.
good. Prof, can I go for a question?
Oh, question to me. Yeah, go ahead. Shoot.
So, Prof, assumingly, if you were hypothetically, you're advising Vladimir Putin, right? And with what is happening between Russia and Europe now, would you advise him to convert a lot of rubles into digital currency?
See, okay, I'll give an answer a different way. A lot of people are making money using this event. I was looking at a Bloomberg report yesterday where it was shown historically that people who traded on the word invasion, historically, last 80 years, they made a lot of money. So today, not only crypto, actual stocks, people are trading and making money. And it is found that in the energy sector, because oil price is almost touching $100 a barrel, people are making money. So there are some people who want this, heated exchange continue, not a full war, but heated exchange continue. So yes.
So that's a tip. Thank you very much for that, Professor.
Okay, so the next speaker is here, and there's no more questions, so I stop here, and the floor is back to Ganesh. Take it up, and then you continue.
Thank you, Professor. I would like to invite CA and Dilip to give a vote of thanks for our Professor Ashok Banerjee and to introduce about Arif Khan. And Dilip, over to you.
Thank you, Ganesh. No doubt, this has been a very informative talk by Professor Banerjee. It has been truly fascinating to comprehend how immense and pervasive fintech is in our lives today. On behalf of ICAI Kuwait chapter, I would like to thank Professor Banerjee for sharing with us the latest and greatest about fintech and its disruption in the BFSI space. Today, we heard about how fintech addresses key issues and pain points about the participants in the fintech ecosystem and their latest trends, as well as its flip side. We're sure to follow fintech developments with much more interest now. And now, I would like to introduce our next speaker, Mr. Arif Khan, the Chief Digital Officer of Npci, the National Payments Corporation of India. At Npci, his role includes strategic planning of digital transformation and growth of its portfolio of new products, thereby driving innovation in technology and analytics. Previously, Mr. Arif has been associated with Razorpay and HDFC for over 15 years. At HDFC, he was instrumental in driving strategic initiatives in payments, digital banking, and financial inclusion. With an overall experience of over 18 years in product management, business development, and innovative business and technology solutions, Mr. Arif has been at the forefront of delivering new age, innovative, and disruptive fintech solutions. Mr. Arif, over to you.
Hi, good evening. Sorry, I had got logged out for a minute. I don't know whether coincidence or someone decided to throw me out. You need to allow me to present, right? So you'll have to do some screen sharing if that's okay with you.
Yes. You can share the screen.
Is my screen visible?
Yes, it is visible.
Okay, fine. Thanks. So, without much ado, I'll start and we'll take questions along the way. But just mind you, I'm actually a techie, so my DNA is tech. And tech guys do not really listen a lot and they're not necessarily very patient people, right? And obviously we are not as articulate as the professor was. So please bear up with that and we'll start. So quickly, when a very interesting conversation professor was having, right? I think he covered so many topics, right? He touched upon tokens, he touched about DLT, he brought it together, he spoke about disruption, he spoke about fintech. I don't know how he compressed it all. But very interesting while he was talking about it, and that's where I kind of just copied the slide on the fly. He spoke about the fintech factor and the dangers that lurk on the bank, right? And I thought from a good continuity point of view, because somewhere what we are trying to do also deals with that in a certain way. And this is a very, great slide, which actually talks about the potential impacts on bank, the areas which are really problematic, and, what are the alarm bells that are going. So I just put it up for you guys to view and consume it while we just get heated for the next conversation, right? Similarly, right, the professor was speaking about how banks, if they want to survive in this world, what they need to do, right? How they need to adopt technology, they need to adopt fintech. And I think he also spoke about how we should partner. And when we look at it from this lens, right? Typically you had these traditional banks which are right in the center of it. Typically, this is what the banks were, their core function stroke advantages. And now we have fintechs, large tech companies like Google, Amazon coming on either side, PayPal, MasterCard, us, etc. And this world is shrinking from them, right? And if you look at it, the traditional bank strengths are now left just to 3, 4. Besides the regulatory support they have in terms of a license and a huge investment of infrastructure they have done in distribution in terms of branch, actually practically in every area, they're getting lapped. So I just wanted to continue with that theme, and now we'll just get on to our topic. So the focus for me today is, largely from a Bharat inclusion, from an Npci point of view, and a little few more lenses that I'll apply. We'll take questions on the go. I don't think I can navigate chat on the go, so just put your hand up, raise, and we can take a question, okay? If that works for you? So I wanted to start with a small story, right? The story is of a lady called Savitra Devi. Way back in 2010, just some information, in the remote part of Maharashtra. So Gondia is a district in a very remote part of Maharashtra, my home state. She's from a village called Chichgar, not much educated. Primary source of income is farming, laborer, house activities. Elderly woman at this age also has to work very hard, right? So it's a daily wages woman. Just to give you an idea as to where this city is, it's in one corner of Maharashtra, as I was explaining to you. And typically, the government was giving some kind of pension, if you may want to call it, to these poor, needy people, right? And typically, the money was moving from central, from the central agencies to the district, from the district to the panchayat level, to the next level, and then actually going to the eventual beneficiaries. We all know in all this, it is jumping hands so often that practically 30 to 40% of the value was lost along the way, right? Because there were a lot of middlemen, culprits, and a lot of other activities happening over there, right? To get this money, to actually get this money in her hand, besides the loss, this lady actually had to, travel roughly around 25, 30 kilometers on a particular day. She lost her entire day, spent money on buses, rickshaws, spent around 7,500 rupees a day. And please remember, she was a daily wage earner. So she loses her daily wage also that day. So this was the reality. And this is just not this lady. There was hundreds and millions of laborers, farm workers across the country who were going through this, right? Now, what happened in India, and I'm sure all of you know about it, India came up with the Aadhaar card, right? So she goes, Savitri ji goes, she gets an Aadhaar card, thankfully with a very easy registration in 2012, gives her a sense of identity. And that's followed by the 2014 national mission, what we call as PMJYD, where a bank account for her gets opened, right? By large public sector banks. And this is the story where it actually comes to play. By 2015, using the Aadhaar enabled system, we launched something called AEPS, where banking became much more easier for this lady, right? She had a bank account, she had an identity, the biometrics was there with UID, Aadhaar. So instead of her going to the bank, taking that one day off, traveling, spending that time and energy, what we had, these BC and service points, customer service agents, visiting her village once in a week, once in 10 days, once in 15 days, whatever frequency on a pre-designated time. It made life so much more simple for her, right? So this is when AEPS got launched, which is one of the products that Npci runs, right? So this is the story of Happy Sarvati. It's called AEPS Doorstep Banking. And when you look at financial inclusion, when you look from an India point of view, the length and breadth of the country, I think something like this becomes extremely, extremely important. And that's where we take a lot of pride in Npci to bring these services, right, to the country. obviously you understood this, saved her the money, saved her travel. And imagine at this age, if you have to travel by bus and all, what are the impact of it, right? Now, thanks to this entire scheme, 350 million base are actually eligible. Not only does it mean that the money reaches the end point more seamlessly, more faster, okay, it also means that the access to use that liquidity, to access to that money is being made much more simpler. India at a glance, right? And I'm sure most of you know about it. You know our GDP rising, 2.6. We want to get to 5 trillion, hopefully soon enough. Bulging population, average age is 27, 28. So, we really have a very, very young population. Unfortunately, our credit penetration or our card penetration per capita is really low, 0.66. It's nothing compared to the Western world. Bank account penetration has increased dramatically over the last few years. It's close to 80. But yes, quite a few accounts which are, mostly in a deactivated status. Mobile has grown significantly. E-coms keep bubbling up. Right? Predominantly, India has always been a cash. It continues to be a whole lot of cash, but there is a great side, right? The trend is, as we speak right now, we see roughly around 40% of payments, 40% of transactions happening non-cash. So that's like a great significant move that the country has made, but there is so much more work to be done, right? And there's a great opportunity as we go ahead. Just to give you another, picture of this, the overall digital payment in India has really, really leapfrogged. And this is a lot thanks to what we call the India stack. And I'll unpeel it as we go ahead, right? What it is meant is low cost and reaching out to the masses in the next 5 years, right? I mean, if you look at it from a growth point of view, UPI has been practically growing at 2x on a year-on-year basis. We will close February 2022 with close to 4.5-5 billion transactions in the month, right? What it means from a technology point of view, if some of you are interested on the technology side, that practically as we speak today, we at Npci do roughly around 1.5 billion API interactions a day. And if you look at it by any means and standard, probably is the second or third in the world. Again, while COVID essentially has been a really sad story for entire humanity, right? But there is some green shoots. There is some things that we are seeing which are positive. One of them is obviously the impact on digital payments. Clearly during COVID, obviously there was a dip, but it's coming back very sharply. We are seeing more and more people adopt digital. And this is not only a phenomenon in metros and tier 1. We are increasingly seeing the traffic coming from tier 2, tier 3 locations. Now, when we talk about financial inclusion and we talk in context of India, I think we need to always remember, right? The networks are yet very unreliable. There is zero or practically no digital literacy. So people tend to get defrauded. India is a country that has multiple languages. So language barrier is clearly one of them. And obviously there is low trust, right? Both sides, on the supplier side and also on, there are housewives, etc. There doesn't seem to be enough trust. And without that trust, credit becomes a huge problem area, right? And what it means, it pushes up the cost. There are a few trends which you are seeing, while there were negatives, there were challenges, obviously with the 4G and 5G revolution, thanks to Jio, the way it is making, with its low data rate, low cost rate, I think it's making a huge penetration to us, right? And the next thing that we see is contactless payment and new technologies that are coming into the country. Let me try and explain this with another simple model, right? And we use this very often. So let's picture this, right? There is this lady, housewife, Rajni, and what she does is, she's not a housewife actually, she's a street vendor. I'm not sure if you people are aware of Dadar in Bombay. This is my home city. It's a pretty crowded station, one of the main linking stations in the city. And outside Dadar, you'll find a lot of these street vendors. And Rajni is one of those street vendors. And what she does is she sells what we call pakoras, right? She sells bhajia. Now she starts in the morning, early in the morning, 6:30, because a lot of cab guys, rickshaw guys come to her for breakfast. They have lunch, dinner, and so on. And her challenge is she needs some capital, even if it's for a day, to invest in her business so that she can grow. But what happens? She doesn't get credit. She just doesn't have credit, right? Why? The sale cost to her is very high. The servicing cost is very high. And most importantly, Rajni till date did not have any credible data basis which you could do some kind of credit scoring. She hardly used a bank account. She did not have any kind of digital footprint. So her cash flow was, whatever her cash flow was, it was all cash based. And that's where the problem starts. And incidentally, there are some surveys done that most likely to pay back this loan is Rajni. Her default rate is the lowest. What she does today is she actually does manage a loan. She goes to a local, if I may use the term, someone who, like a ruffian or a gunda in an area, who will lend her 500, 600 rupees for the day. He'll give it to her at 6:37 in the morning. She will have to repay him by 7:38 by the time she winds up a business. And even on a 500, 600 rupees, she will be paying him 50, 60 rupees as commission just for a day. Now you imagine, what are the key steps for Rajni to get a small loan? These are very, very obvious things, right? If you want a loan, you need to agree to share some data. She actually discovers who are the different people who are ready to give her a loan. She accepts what is the best offer. She receives a loan. She sells the products. And at the end of the day, she repays the loan. So pretty simple step for Rajni to do. And can she do it? The answer is very simple. To do this loan, to get this, I think that's where the key things comes in, right? Each step actually requires a very specific solution, right? And that's what India Stack and that's what Npci has been trying to do, right? So if she has to accept the best offer, it has to be a paperless contract, because the moment there is paper, there is someone signing, there's a bunch of documents, it's got a cost, it's got a turnaround impact, right? That a transaction needs to be seamless, right? I mean, otherwise there is cash exchange, which again has a cost. She needs to have some kind of payment app, right? And most of them do actually have a phone, either a feature phone, and most of them in metro locations would have some kind of smartphone. So can she get a very simple payment app where she can actually apply for the loan, she can discover the loan and repay the loan. And at the end of this, you actually need a credit market app, right? And all this is not possible if there is no consent architecture. What I mean by that, she needs to agree to share the data. And she's the only one who's authorized to share the data, because if her data goes out, it could be misused. So Rajni needs to agree to that. And when you look at this and you look at the outer circle, right? This is what actually is happening in India at a, let me call it at a public level as public good infrastructure, right? We had Aadhaar eKYC that came into place. You've heard of DigiLocker, where all the agreements, documents, etc. can be there. Now we have account aggregator. We have something called OK that has come into the country. So it's all API driven. We have UPI, which is a seamless four-party model app that can enable payments P2P, P2M, and so on and so forth. And what it has allowed now is Rajni, with this very simple app backed by her bank account, can get a loan basis the business. Because what we have done is, banks has actually done, is they have gone and given her a QR code. So every payment, when Rajni sells a vada pav or a misal pav or a bhajia pakoda plate, she's getting 15 rupees, 20 rupees a plate. Majority of the people have started paying her by QR code, by scanning the QR code. Every time they scan the QR code, the money is actually going directly to a bank account. What it means, there is a digital footprint. It's as good as a cash flow-based lending. And that's what is required for the country. Another very important thing is, with more and more digital payments, see, you need to understand payments and credit, in my mind, they are like those sprockets, right? They are gears, right? The payment gets the digital footprint going, it kicks in credit. Credit means more, more surplus amounts and money to spend. And it actually is creating those levers which will help us grow the ecosystem, take them to the next level of GDP and so on and so forth. So coming back to financial inclusion, right? I believe there are three extremely important points when you talk about financial inclusion. That's obviously possible when those three P's come into play, right? That is public, the other is the private sector, and policy. And I think if you look at India vis-a-vis compared to some of the other nations, I think this is the three things that have come together and actually given us what we call the India stack, right? And basis this, all that digital transaction foray that India is making and India is shining from a digital point of view is thanks to all these three parties coming together. So there is a development work, regulation work that has to be done. It helps the economy, and that's where the society is coming into play. Obviously, all this has to be backed by government initiatives, and that's where the PMJDY, the pension scheme that came up, Prof spoke about insurance, the small insurance that came, the digitalization of money, we have it in the form of Bhim UPI, the digitalization of banking service with the help of fintech partners, the fintech literacy, all of these have come together, and that's what is the way you actually make financial inclusion happen. We all understand the benefits of financial inclusion, reduction in cash economy, it's more empowerment, financial services for all, standard of living will grow, and that really helps us, right? So these are some of the key stakeholders when you talk from an India context, right? Obviously, you know about Reserve Bank of India, you know about NABARD, Npci, that's the firm that I work for. There is UIDAI that runs Aadhaar, Niti Aayog, and they've been coming with some really great policy and draft documents, which I would recommend for you to review as to what's happening in that space. Obviously, the Insurance Regulatory Authority plays an extremely important role. Pension Fund Regulatory Authority plays an important role, and TRAI, because at the end of the day, the last mile connectivity is all happening through mobile phones. These are some of the initiatives that are running in the country. I'll just run through this pretty quickly. So, you know, we tried to map, you know, what are the different things that have happened at different points of time, which has actually enabled the entire financial inclusion journey in the country and really been a catalyst. Some of them are, you know, PMJYD, which when it happened in 2014, a couple of years before that, the Aadhaar revolution happened. And in 2015, 2016 is where the Aadhaar enabled payments and UPI started kicking in and Bhim. And actually, we are yet carrying on that momentum. While there are many more things happening, now these interfaces are going through the next revolution, right? There are more value-added services. You would have heard about recently during the COVID time, India was distributing what we call e-rupee. E-rupee was a voucher that would be given. So imagine this, you know, if you have a maid or someone in their house and she or he needed to get a COVID vaccine, instead of giving them cash, which they could have misused or someone could have taken from them, they actually get a digital voucher. And if they have a feature phone, they get it as an SMS, which they can go to a COVID location, you know, to the relevant hospital. There were plenty that were created by the, you know, the government along with the health stack that work was done. And what they could do is exchange it and actually get themselves vaccinated. And that's perhaps has helped India reach the vaccination levels that we have. I mean, we talk about digital, you know, growth. I thought it's important that you understand as to what are the kind of volumes that India is already doing. And these are volumes up to January 2022. And right on top, if you look at it, is 7,000 crores. Out of the 7,000 crores, 4,700 crores are going through Npci and the products and system that we run. So that's roughly around 69%, right? These are some of the products and numbers. I will share these slides with the organizer so they can share it with you at a later date. We often talk about the JAM Trinity in India. And I wanted to now get into a little bit of what is this JAM Trinity, how does it actually work, right? So if you take one of those pillars, right? I mean, you imagine 45 crores beneficiary banked so far, right? Imagine that volume. I mean, that's not even the population of few countries put together, right? We already have 131 crore Aadhaar cards. So it's like 94-95% of the population already has that, right? And today, India, we have roughly around 1.1 billion users. That's more than 85% of the population who are in some way connected using some kind of phone, right? Whether it's a feature phone or it's a smartphone, somewhere or the other. Now, that's the real catalyst behind all this. When we look at that, I mean, you look at this PJ, Aadhaar, mobile, what Npci has done is created a payment product layer on top of it, right? So we have RuPay cards. So let me tell you, RuPay is India's own debit card and now a prepaid and a credit card also. But, you know, the question would be, hey, there are so many cards and there are so many domestic schemes. What is the difference? But the difference is RuPay today is working with 1,500 banks. So there are some large cooperative banks, RRBs, there are public sector banks, private sector banks. They all issue RuPay cards. What you need to go back and understand, vis-a-vis international card schemes who had done a great job, but they typically work with the top 10, 15, 20 banks in the country. But the distribution of these banks in tier 3, tier 4 locations doesn't exist because those banks don't go there. On the ground in a tier 3, tier 4, it's the cooperative banks, the NABARD-driven banks, entities that are actually doing work. And that's why this broad basing of banks, working with multiple banks across segment was extremely important, right? Now you have Aadhaar-enabled payment system. There are multiple banks who have joined it as issuers. There are multiple banks who have joined by acquirers. What I mean by acquirers, they are the ones who tie up with the agencies, what we call BC locations. And thanks to some of the regulatory guidance that we got and policy that we got, now the number of BCs are going on increasing. What it means that people like Savitri Devi, who were losing a day, get to benefit so much more from them. And what has also started happening, a lot of these BC locations, you could pay your bills like, if you have electricity, you could pay your electricity bill over there. And a lot of them have also started giving remittance services, right? What it means is majority of these people who are in the interiors of India, they would have some young person from their family, maybe a young boy or a girl who's doing some work in a city like Mumbai, Calcutta, Chennai, Bangalore, and sending some kind of money back to his parents, right? Maybe 1,000 rupees, 2,000 rupees. Now, this has made it convenient that there is money going in from a bank account, his bank account in Bombay or in Bangalore, and directly landing into his parents' account or to his wife's account or his siblings' account. And all they need to do is go to this BC location, use their Aadhaar, put in their biometric, completely secure, and they get that 200, 300, 400 rupees whenever they want to withdraw. So that's the layer Npci has been busy building. I'm not going to go too much in numbers because I think we'll lose a lot of time there. Just unpeeling this entire India stack a little bit further, I think I'll go to a little more simpler slide, right? So we hear very often, what is this presenceless layer, paperless layer, cashless layer, right? Let me try and spend some time on this and give you a little simpler answer for it. When you look at cashless layer, the entire digital payments, actually it forms a part of this cashless layer. And that's where Npci plays a big role, right? When you talk about paperless layer, imagine Aadhaar e-sign or digital locker. Let me try and give you an example. Today, for example, if you take a house on rent, especially in India, you do some kind of agreement, you get it notarized, there's a bunch of documents, you Xerox it, you have to physically sign or you sign it with Aadhaar. Imagine if it was digitally possible, right? If you could do it on mobile, what is the power it would bring? Imagine, it would not only help in terms of efficiency, faster turnaround, better documentation and digital footprint. Imagine what it does from a go green point of view, right? The quantum of paper that we consume just to these kind of agreements is so huge. So this is just one example of how it helps, right? And obviously in all this lies your presenceless layer of Aadhaar, right? I mean, imagine the power it has got, right? You have your biometric identity, which can be accessed with open APIs, right? And that's what multiple users are doing. And all this can be done only by you. So these are some of the digital platforms. I'm sure you've heard about some, but I just wanted to put it up so you understand what else is coming up. GEM, again, is a platform of public procurement in India that is doing really well. You all know about GSTN. There are new programs coming, there are programs that got recently launched like CoWIN, which has done a phenomenal job. There is an integrated bill pay system, BBPS, and a lot of the part of the world is trying to, kind of replicate that. There's another program that we do, which is called FASTag. Essentially, whenever you're passing a toll gate, on the highway in your car, instead of waiting and giving cash over there, there's an RFID sticker. It just, it's a quick blip. It reads it. It deducts the money from your FASTag and you're on the go. What it means are lesser queues. Now, this FASTag program is getting extended to other applications also, right? Because this is the start of a journey for IoT, right? So for parkings and so on and so forth. But imagine this, in remote locations of India, right? I mean, someone on a farmland, say he's renting out a factory. He's renting out a tractor. Now, imagine this, using IoT instruments and those kind of things, the tractor, he can actually pay per usage, right? Instead of paying a daily allowance for the tractor, if he's using it to till only maybe 100 meters of land or 100 square yards of land, can he pay basis that? So all that becomes a possibility, right? At Npci, we have multiple products, right? And different products cater to different layers, right? And what I've tried to do is break up which product fits what layer. Clearly on the top layer, all our products fit in because, these are the premium customers or the customers who stay in urban India, have X income and so on and so on. But very importantly is where our focus now is on the bottom layer and the middle layer, right? And that's the bulk of the population of the country, right? There's 430 million, the way we look at it, sitting in the bottom layer and roughly 500 million sitting in the middle layer, right? And what we have done is we've started orchestrating products where these underserved could get better. So, we've got this RuPay card, which is a debit card only for domestic purpose that enables people to, to do their shopping. And actually, if they call up their bank, they can actually also get it operational or international. Obviously, they don't do much of that. But basically, what we have done is actually give them a debit card. And along with the debit card, there is a small insurance. So that really helps them, right? Again, there are different flows that we try to look at. So there is business flows, that is B2B. We look at P2P, remittances, and you would imagine, right? Remittances is an extremely important thing, right? We enable businesses to pay salaries or landlords to pay farmers through distribution. More importantly, we work on P2G, so that is public transport, and utility payments, a whole lot of G2P. So the entire government DBT. Let me try and give you an example, right? During the COVID, when the US Fed, etc., they decided, the Senate, whatever it was, they decided that for a certain segment of society, they want to give out some dole, some benefit of $300, $400, right? From the time they decided till the time the person actually got the money, I understand was 6 or 7 weeks, because they decided, they made a list. Then based on that list, they figured out who's this person, where does he stay. They actually send him, something like a demand draft or a check, which reached him. It got delivered to his place. Then this person he goes and encashes it. He stands in a queue in a branch and encashes it. This is what actually happened in US. But what happened in India, right? It was simple. The day the government decided, yes, we want to give out X value, 100, 200, 400, whatever the value was. It's simple. There was a file that was given to Npci. We mapped it to the Aadhaar. This is the Aadhaar. We were able to trace the bank account, and that credit happened same day. And that money was used and withdrawn by people by not going to the branches, but by going to the AEPS BC locations. So that's the power of digital, right? That's the power of distribution. That's the power of, enabling people to more effectively and efficiently work. So these are, but again, I'll skip this and move on a bit. People ask this question, and I've actually picked it up from a recent report on mygov.in. I mean, just look at the quantum, right? And this is up to January 2022, that figure that I picked up. You look at the count of DBTs that have been done digitally. And as I told you, all this is moving in minutes. It's actually, well, I said it's day, it's actually moving within minutes, right? You see the beneficiaries under PM Jan Dhan Yojana, number of documents issued through DigiLocker. That's fantastic. It's unbelievable. It's not happening even in the West. You look at the total number of beneficiaries under the PM Kisan Samran, and I believe this will pick up more. Doorstep banking services, right? So we have close to 1.5 lakhs, what I call BC and those kind of location. And with India Post Payment Banks coming into the play, it's just going to, really go through the roof. UPI, we all know the story, right? As to what kind of value has moved through UPI. Very important thing, when we realize that we can't have solutions which are only on smartphones, because a lot of India yet is on feature phone. They are moving to smartphones, but yes, a lot of that exists. So what we've done now is actually made UPI available on feature phone through IVR solutions in a very, very simplified menu. All right. So we had done something which is on the USSD channel earlier. It did not do well for various reasons, but we actually have it on the IVR, right? So imagine in your local language with, natural language ability, etc. Someone calling up, they just dial one number, short code, they can actually prompt and a financial transaction can be done. More importantly, it can allow P2P transactions also to happen, right? So this is a POC that is happening now, soon to be launched by the regulators. RuPay I've spoken about, so I'll just move ahead. I spoke about the Prepaid E Voucher, right? So one of the use case was when we gave out the COVID vouchers, right? But imagine the use cases that can come on, right? DBT could be in. So imagine if there is a subsidy for fertilizers. Instead of giving any cash or any money to the bank account because you don't know where it could be used, imagine someone gets a voucher. This is a voucher for 300 rupees for you to exchange it against fertilizers. And it is digitally signed. It cannot be misused. It's verifiable. It is for a specific purpose. It is for a specific individual. Again, coming back, right? To make all this successful, obviously, it's not Npci alone, right? It's Npci, banks, and fintechs all coming together, right? Without all this, none of this is happening, right? Because a lot of the last mile enablement customer servicing, digital enablement is all happening through a lot of these startups, these big digital companies, right? So whether it be a Google Pay, whether it be an Amazon Pay, they are bringing a whole lot of technology. They are bringing, a lot of, you'll be surprised to see some of the UPI apps that exist in the country, and some of them support 20 languages. Like we at Beam support multiple languages, right? I'll quickly wind up if we have 5 minutes more. Is that okay?
Yes, it's okay. You can continue.
Sorry,
sir.
I've been trying
Very
to rush
interesting.
through. Okay. See, another platform that I thought and is just coming up. In fact, today someone from the ministry, we were having a conversation on this. So ONDC, right? It's India's open commerce platform that is coming up, right? Extremely interesting. Please understand what happens is, you have these great marketplaces who have done wonders, like the Flipkarts of the world, the Amazon of the world, and nothing against them. But at the end of the day, it becomes a 2-3 player game, right? Imagine this, right? How do we unbundle this, right? How do we create an open network, something that is for public digital? So, imagine this. There are so many Kirana stores in India, right? And there are people who are providing logistics or people who have those runners, right? How can we bring them together? You already have a buyer side, okay? How do we allow these local retailers to create their own independent marketplace and be there, right? So that's the entire effort with ONDC that is going. And the beauty of it, it's decentralized. It's not like a platform, right? So there are some great platforms that exist, but then a platform over a period of time creates a CUG. And then, there are higher rates. There could be 20% rate, 30% rate, and so on and so forth. What this allows is independent entities to come basis what is their specific skill set or what is their capability to come into place, right? So imagine this. If someone wants to set up something like a Swiggy or a Zomato, imagine the infrastructure that they would require. But here what ONDC is saying, it doesn't matter. If you're a kitchen, you produce meals, right? There is somebody who will find customers. There is someone who will pick it up from you. There is someone who can pack it, right? And so on and so forth. So this is the new open commerce railroad that is coming up in the country. I would urge all of you to read and understand it. I think it's going to be extremely, extremely powerful. And I think that's going to be the next wave, right? And what I put on the left side is, some of the key principles of the, entire ONDC. It's a facilitator, not an operator. It's decentralized. Professor spoke about decentralized, right? When he was talking about distributed finance, he was speaking about DeFi and the new architecture. It's distributed. It's completely open. It's interoperable. So it's interoperable on the technology front also, right? So someone could be using blockchain, someone could be using some other sets of API. It is participant-centric, and it is evolving, right? And I think what it has done is overall energize what we call innovation, and we believe there'll be more and more players coming into it, right? And you'll be surprised. There is a Kirana store, sorry, not a Kirana store. There is this small, this person makes some small artifacts kind of thing somewhere in Mizoram, and there are customers who he has in Bangalore. Now this has helped those customers to connect to this artifact guy in Mizoram, and he has got someone who can pick it up from his shop and deliver it over there. Now that would have not been possible before, and this is what we've discovered in the POC as we speak, right? So this is in the trial run, they're finding this, right? I mean, talk about all this. I just wanted to get back to the larger global, because look, we are a part of a larger society and, part of the larger globe, right? And on a recent survey that was done, right? I mean, it's a global, and it was on global payment trends. And you look at, where we are and where we had. And obviously global payments is going to grow. But the most encouraging thing is our part of the world, which is roughly around 494, if I'm not mistaken, at this point in time, 494 billion, is likely to go up to 1818 in the next few years, right? In the next 6-7 years. So that means it's a 4x headroom. So the opportunity is great for people in this region. The opportunity is great for our country. I had put up some global payment trends. I think Prof also spoke about it, but I'll quickly run through it. So payment as a service is really becoming big. You have players like Open in India. You have Play that are coming up in a big way. Payment firms are turning to DLT. There's huge effort that is happening on DLT. We at Npci, we actually run a DLT platform. We run one of our products on this on a prototype basis. doing reasonably well. We're trying to figure out how to scale it up, right? Cross-border payments becomes extremely crucial for India as a country because I think we have roughly around $80 billion coming into the country. And you need to understand a lot of the majority of the $80 billion again goes to tier 3, tier 4 locations. And the earlier methods or the existing methods of retail remittance that is happening is on average costs 5 to 6%, which I believe is really high. Right. So so imagine a blue collar, and we have a lot of our blue collar labor out of Middle East, and they do send money back home to some corner or into some corner of maybe Bihar, UP, Maharashtra, whichever part of the world they are in, to their parents or their family. And that person, besides the cost he's paid over there, actually is incurring a 5 to 6% FX cost. So obviously these systems need a severe refresh, and we're all trying to work on that. You would have heard about it recently. India announcing a joint working group with Monetary Authority of Singapore and Reserve Bank of India, where we are actually trying to build 2 domestic schemes, that is Pay Now in Singapore and UPI in India. So a real-time transfer can happen, and we believe that we can actually reduce the cost of transfer by 1/3, if not more. Digital currencies, again, will not labor much about it, but digital currencies is here to stay, irrespective of whoever says what. But clearly, they are getting a lot of money, funding, and huge capitalization in the market. Data and AI ML services, I think that's a reality. AI is here to stay. We at Npci use a whole lot of AI and ML. We run models for fraud prevention and early fraud detection and so on. Okay. Super apps, that's a big phenomenon that's happening. You've seen apps like Paytm, you've seen apps like PhonePe. So I think embedded payments is the next big thing, and we will see more and more players coming into that, right? So thanks. That was it from my side. So any questions? Sorry, I rushed through it a bit, but happy to take some questions.
No, it was very amazing, and it was very interesting to know about it. Your presentation slides were amazing. So any questions, please, members can ask or write in the chat box.
Or maybe I rushed through it.
No, it's correct. So
you covered, Arif, you covered quite a lot.
Yeah, a lot of things within 1 hour time. So it has to be a little bit fast, but it was very nice.
Thank you. Actually, someone has made a quote over there, quite technical. Actually, I was trying not to be technical. Sorry about that. Maybe I can.
No, it's okay.
One question I'm having.
Yes, sir.
Yes, sir.
Now, with all this, technology platform, can we say that India is a digital country and we are much ahead of other countries?
Okay, let me put it in this way, right? I think we have a long way to go in terms of complete adoption, right? People forget we are a country of 1.4 billion population, right? And from where we are coming. So from that point of view, if you look at that yardstick, we firmly believe that, and our motto at Npci is to do billion transactions a day. I call it bad. My boss doesn't like it if I use the word bad, but billion a day is we want to do transactions. And I think that's where we want to get as soon as possible. I think that's a reality in the next 2 years. So if you look at it from that point of view, I think cash is really dominant. Cash is yet the king in the country. So we all have to put a lot of effort. So that's one side of the story. But if we talk about platforms and what we have done on the technology side, I think India, and thanks to, people like Professor, I think India really has got it right from a foundation point of view, right? Whether you talk about identity in the form of Aadhaar, what has come in the form of CoWIN or UPI, I think we've got the ingredients. And the good part is it's pretty democratized, right? What I mean by that is there's a very good public and government partnership in that. So unlike the larger part of the world, right, where there are 2-3 organizations who run the show, this genuinely is public digital good, right? And public digital infrastructure. And wherever there is public digital infrastructure, what you can make sure that there is enough competition, it is not biased towards a particular group, and it can reach to the maximum and yet reduce cost and increase competition. So I think from that point of view, I think clearly India on the digital side has done fantastic work. I would say we are in the top 2-3 from that point of view. And my validation for that is, I run UPI's technology and some of these products in Npci. At any point in time, in a given month, we are talking to at least 20 to 30 different regulators of different country, asking us how we have done it, how should they do it, asking us for some advice, consultancy, or even that, hey, can we get UPI? So I'm not sure whether you read Bhutan and Nepal have adopted UPI, and you'll hear a few more countries very soon. I think Prof has a question, so we'll take that. Yes, Prof.
Yeah, I have a question.
I'm allowed to ask. I'm allowed to ask as a student, right? But
no. The question may be a little controversial, but I would still try, which is this NPCI's regulation on the size of a digital payment platform, like 30% or whatever is the size. There are many big players who are already at that size, like PhonePe, for example. So as per that guideline, they have to reduce, to cut back. That means they can't take new customers. So the question here is two. One is it on value basis or number of customer basis? Is it on value of transaction 30% or number of customer?
Actually, Prof, I think it's based on number of transaction. Market share is based on transaction, not on value, because we are a network. So, I mean, if you ask me what is the value of what NPCI process, I will not know. I will know transactions, and more so because I look at it from a technology point of view.
Right. So, yeah, going with that number of transactions, just the related question is that then what it encourages is that because you don't allow players who are already entrenched, have a good technology, you are encouraging the newer players who may have now 1% market share or 2% to come, and maybe they will disrupt because they may not have such a huge architecture in place. So thereby, just to put control on monopoly, there may be some disruption in this space.
Quite fair, Prof. But incidentally, I don't run that compliance, so I can't comment on it. But my personal view, if I may explain my personal view, I think UPI will see an exponential growth. So as I said, 1 billion a day. So today, when we look at it, when we are doing 4.5 billion transaction and in a month, and then you look at 30%, but then you imagine if you are doing 200 billion transactions a day, and that time what happens, right? So I believe the new players will come with new use cases, especially for like products like AutoPay, e-Rupee. So I think the number of new use cases that we launch will enable. So look, when we launched earlier, people picked up on 2 use cases and they scaled and they did a phenomenal job. They're great partners, no doubt about it. But as we come up like bill payments, right? Even today, bill payments is such a hassle for a lot of people. So there are people now only focusing on bill pay. So what's happening, interestingly, Professor, is, and I know some kids, there's a company called FamPay. I advise them once in a while. They have come up with a product which is specifically only for students in the age group of 12 to 17 or 18. Right? So what they're doing is they're going very segment specific and very deep in that, right? So there is a particular segment who's trying to solve only for drivers. There's a segment who's trying to solve only for societies and maids and so on and so forth. So I believe the more use cases we enable, the more UPI will grow. And these are the use cases where, each one will become 2%, 3%, 4%, 5%. So that's how I see. And interestingly, Prof, since you asked me the question, I think now banks are also coming back into the fray and taking charge, right? So they also driving their own apps. So you would have seen what has happened with the SBI, I think that's a great start, right? And I know a couple of large public sector banks who are trying to come up with their own apps, and they have a loyalty program around it, rewards and whatnot. So let's see. So wait and watch.
Thanks.
Yeah, I have one question. Like when we have so many platforms, so is it possible for India to, discontinue the higher denomination currency, like 2,000 rupee note or 500 rupee note?
I think somewhere I don't see that happening very quickly. Okay. And at the end of the day, I'm not necessarily an economist, so I really won't be. But I really don't think that happening very quickly, right? So I don't think digital currency in any way is linked to that. So I think if anything, the purpose for a digital currency would be to get more and more people into the digital universe, right? If I will put it the other way around, I think that would be a primary objective right now. So less cash, more digital. And then maybe a few years down the later, the regulator or the government could decide whether it makes sense to do something like that.
Right. So this,
I think we have a request from Ravi Diora. He wanted to ask. So Ravi, please go ahead. You have a question?
No, sir, Sriramji, thank you very much, sir. Actually, I was liking the last slide, which was saying that all the 5, 6 parameters, this from this, somebody's packing, somebody's delivering, somebody's that combination of one single chart. How soon, ONDC, yeah. And how soon it can come, and what could be the probable sites where we can get it more details about it?
Sure. So I will, let me do one thing. I can send you the website. I can send you a masterclass, what is ONDC all about. So as we speak, there are some pilots going on. The core, so the way I define pilot may be very different in the sense technology feasibility, etc. is going on. But you're likely to see a POC in the next 3 months. Okay. From what I know, it is gone for some, what they call thappa in India at a very high level. So I think that blessing would happen sooner than later. And once that blessing happens, that some of the use cases in some segments should start within the next 3 months.
So my point is that it is going to add value to the startups. Whenever somebody is starting up in anything in the 100%. India, then it will be startups. So there are many things which is coming. So that's why I was thinking I want to start up something in India.
100%. 100%. Yeah. 100%. Let me give you an example. There's one, this is already happening, and these are the guys who actually wrote the backend code. There is a gentleman called Mr. Sujit, great technologist, if I may say so, and great thinker. What has happened in Kochi? Cab guys who have a taxi, they always have the choice to join Uber, Ola. These are the large 2 providers in the country. And during COVID and all, they were operating, some of them were operating, not operating. So what someone has done is actually created a cab aggregation without being a Uber and Ola. So there are people who are saying, hey, this is my cab, I want to join in today. And there are people aggregating. And there are people in between who are saying, okay, I will book your hours. And these are street guys. These are not necessarily super fintech tech graduates, right? There are street guys who have done that.
So I agree with you. So one taxi driver in a Panvel also, in my home house, he is having a 30, 50, 40 taxi drivers joining in a WhatsApp group, and he's running a very good show.
Absolutely. But see, what you need to understand is he's got the supply side, but the demand side, he has very limited audience, right? Now imagine that if this taxi guy was discoverable on a Google Pay app or a Paytm, I wouldn't know the taxi driver in Panvel unless you told me, or Thane. I would see, look, there is this cab group. I can book through them, and it's discoverable on my Bheem app or my Paytm app or my bank app. I would do it, right? And the money is moving digitally, so there's fair enough of trust also. You're not giving in cash. So I think that's the power it will bring to the table.
Definitely.
So what I'll do is I'll pick up some stuff on ONDC and share it through the organizers to you. Give me a couple of days. I'll have to curate some stuff because not everything is out. I may have access to some more information than that perhaps. So I'll have to just curate it a bit.
Sure, sir. Thank you so much. There was another brother who was trying to unmute. I'm sorry, I didn't note the name. So yes, Vishal, please go ahead.
Thank you so much. I just would like to know, like, government has allowed to Npci to test the payment without active internet connection. So as of now, what I understand is up to 200 rupees it is allowed.
Yeah.
But once it is, fully activated in India, how do you find that how much business is going to increase because of this?
Yeah. Okay. So I'm glad that you asked that question. So that's a project I've been working for a long time now. So UPI Lite, it's called UPI Lite, right? By the way, it's like, again, we will be one of the first in the world to do something like that, right? At this scale. See, today, roughly around 45 to 46%, if I'm not mistaken, of transactions are below 200 rupees, right? So every time I go down, I smoke. So when I go down, I have a cigarette. I actually pay by UPI QR. Okay, it's normally 15 rupees, 16 rupees kind of smoke. So those payments today make up almost 45%. Okay, and they all below 200. So that's the traffic that ideally we want to shift over. Now the question would come, why do you want to shift the traffic to something which is offline? The reason is because when it's a low ticket transaction, the effort for the bank, whether you do 1,000 rupee transaction or 50 rupee bank is the same, right? In terms of processing, technology costs, and so on and so forth. So what we are trying to do is 50% of this cost or 50% of these transactions are secure. They are basis your balance, but a bank need not process it in real time. So that's a saving from them on a cost, technology, efficiency side, and the payment also becomes faster, right? Also, these small payments are tap and go types, right? I mean, you click, tack, and you move. I hope I'm making sense to you. So yeah, but I believe 45% to 50% of the traffic today is below 200 rupees. So obviously we'll have a target of trying to convert at least 25% of them to start with and probably take it to 50% and so on and so forth.
Are we going to do this only in small towns only, or it is allowed in everywhere? I mean, even bigger towns.
Yeah, I think no. So there is no restriction of geography. I would love to do it everywhere, and I think small towns is where it will also pick up a lot, right? Because small towns, people buy grocery, and there's a lot of sachetization that happens over there, right? So ticket size is genuinely small over there at Kirana stores and all. So I think that's going to happen there too. So there is no, demographic constraint in any way, right?
Thanks, Arif.
Yes, so let's conclude the session, please. Sriramji, would you like to have some words before
Definitely, sure.
Formal vote of thanks? Yeah.
So before we go to the formal vote of thanks, I would like to, really thank the two eminent personalities with us today, Professor Banerjee and Mr. Khan. You really kept us activated. We didn't know the time passed by, in the sense, there's so much of information. And Mr. Khan, I can tell you that it was really not so technical, for us that, we'll not understand. It was really very much relatable. And you spoke about the common things which all of us have touch points on, like when you spoke about the toll gates that we pay and, the payments, the kiraya shops and all those things. Absolutely relatable. And it's touching the lives of each and every one of us. Forget the other class of people which you talked about. So we from here, we can relate to all of that. So thank you so much. And Mr. Banerjee, Professor Banerjee, thank you again to you, because you put the context so very well, and brought into the umbrella of fintech, not just the BFSI, but insurance and a lot of other things which obviously we did not know, and it was very good to hear from you. Now, again, before we go on to a real formal, vote of thanks, I would like to do a little bit of announcements for our members here. So, first and foremost, March 11th, upcoming. So, dear members, we're going to have a cricket tournament for all the members in Kuwait chapter. So, just be on the lookout. You'll have more information coming up. That's one. And other one which I want to tell you is about what Professor Banerjee mentioned also. So we are coming up with a management program for all our members with the IIM Kolkata. So again, just be on the lookout. We'll give you more information about how you could register and how you could basically get benefited out of that. And last but not the least, our newsletter Jagruti. Okay, it needs a lot of articles. So I request every member here to please contribute towards, the newsletter. And newsletters quality is only as good as what our members are. So needless to remind ourselves, we need to give quality articles. So I would expect all of us to keep this newsletter alive. I can share with all of you with without much regret that, that the newsletter needs a lot of article. Now, if not, we'll have to reduce the frequency of the newsletter, and we'll have to then slowly phase it out, which is not the right thing to do. So I really request all of you to please come and contribute a lot of articles in any topic of your interest. And as we have also kept the newsletter open for non-technical topics as well. So please feel free to write, what's in your mind, and then we'll have our editorial board run through it and finally publish it. Thank you, and that's all from me in terms of announcements. And I give the dice back to Gyanesh. Please go ahead, introduce, and then we'll go ahead with the formal vote of thanks. Thank you so much to all the members and to the presenters today for their valuable time. Thank you.
Thank you. Thank you for having us. Thank you.
Gyanesh, you'll need to unmute.
Sorry. Yeah, thank you, Sriram. So on behalf of ICI chapter, first, we would like to extend our thanks to CA Professor Ashok Kumar, our today's first speaker for a truly instructive and informative session. We thank Mr. Arif Khan for sharing his amazing experience and updates about the development of fintech in India in a simple manner, which was intriguing and useful. And I'm sure many of us would have gained some knowledge out of it. Your presentation slides was also superb and felt so connected that it was quite easy to understand. Further, it's late night in India, and you both gentlemen has conducted the event for our benefits. So we really appreciate your commitment, enthusiasm, passion, dedication to conduct the effortful session for the benefit of members of Kuwait chapter. It was really amazing, and we all acknowledge this. So thank you, Professor, and thank you, Mr. Arif Khan. Thanks a lot. Today, although it's not a weekend, but once again, we have observed an amazing number of participants. We thank all the attendees for joining us and making the event successful and interactive. The event always becomes successful only because of members' continuous patronage towards the chapter activities. Thanks a lot to all the participants. Finally, we would like to thank our annual sponsor, Oracle, Almula Exchange, Mughal Mahal, and NBK. Thank you all, and have a very good evening.
Thank you. Thank you.
Thank you, everyone. Thank you.
Thank you,
Bye.
Professor.
Arif, I'll touch base with you on something else later.
Prof.
Sure.
Thank you very much.
Thank you,
Prof.
Bye. Good night.
Thank you, Sriram.
Good night.
Good night.
Thank you, Ganesh.
Good session. Thank you.
Thank you. Thank you.
Thank you.